What if I told you that the paper in your wallet has no real value? That it's merely a promise, a collective fiction we all choose to believe. Money, we use it every day. We work for it, we worry about it. But does any of us truly understand it? Meet Professor Karthik, a professor of history at Delhi University whose life was about to change when he discovered Niall Ferguson's groundbreaking book, The Ascent of Money. To understand today's world, you must understand money, not just how to earn it. When Professor Karthik first picked up the book, he expected another dry economic text. What he found instead was a thrilling journey through time. Money is not metal, it is trust inscribed. Fascinating. Today, we are going to explore something different, the birth of money itself. But sir, this is a history class, not economics. The history of civilization is the history of money. You cannot separate them. The book's first revelation transformed how Karthik saw money. It wasn't just currency, but one of humanity's greatest innovations. Before money, there was the barter system. I give you rice, you give me clothes. But what if you don't want my rice today? Money solved this problem. It became a universal claim on goods and services, a promise that could be stored and transferred. These aren't just metal discs, they are time travelers, carrying value across centuries. But sir, why did people trust these coins? Exactly the right question. Trust is the foundation of all money. As Karthik absorbed the book's insights about the origin of money, he began seeing the modern world differently. Every transaction, every market, and every bank revealed a story thousands of years in the making. If money's first evolution was from barter to coins, then what was the next great jump? However, Professor Karthik was unaware that his exploration of Ferguson's work was just beginning. The subsequent chapters of the book would reveal how money evolved beyond metal to something even more powerful, credit. The bond market. This is where it gets interesting. While most people see loans as a modern invention, Karthik was about to discover that credit has shaped human history for centuries. All these people, bound together by nothing but invisible chains of debt. Yesterday, we discussed how money emerged from the barter system. Today, we'll explore the next big topic, the birth of banking and credit system. The book's chapters on the rise of banking in medieval Italy captivated Karthik. Before there were Amanis or Tatas, there were the Medicis, a family of bankers who turned Florence into a financial powerhouse. Sir, weren't banks just places to keep money safe? That's what makes Ferguson's insights so revolutionary. Banks didn't just store money, they created it. When the Medicis accepted deposits and then lent that money out, they performed a kind of alchemy. The same money existed in two places at once. But sir, isn't that risky? Exactly. The concept of banking is built on a delicate balance between confidence and catastrophe. The book's descriptions of banking's dual nature, creating prosperity yet causing periodic crisis, changed how Karthik viewed modern financial institutions. Would you like to know about our new loan products, Professor? I am more interested in something else. How much actual cash do you keep in reserve against deposits? Ferguson reveals that the world's entire financial system operates on what he calls fractional reserve banking. Banks lend out far more than they keep in reserve. That sounds risky. It is. It's a system built on trust, and when the trust evaporates, we get panicked, banks run, and the economy collapses. As Professor Karthik delved deeper into Ferguson's analysis, he realized that the bond between banking and government was equally profound. The birth of banking was also the birth of public debt. Governments became history's biggest borrowers. War, empire, nation building, all were financed through debt. So sir, do governments also need banks as much as banks need government protection? They are two sides of the same coin, a marriage of convenience that built our modern world. Ferguson's next revelation would introduce him to an even more powerful financial innovation, one that changed the very nature of ownership and risk, the joint stock company and the birth of stock market. So this is where everything changed. As Professor Karthik delved deeper into the ascent of money, he encountered the author's most fascinating revelation yet, how the stock market transformed human civilization, the world's wealth trading hands minute by minute. Today, we explore what Ferguson calls the third great innovation, the joint stock company and the birth of stock markets. Aren't stocks just for the risk takers and the wealthy? Well, there lies the brilliance of Ferguson's analysis. He shows how stocks democratized wealth and risk. The chapter on the Dutch East India Company particularly captivated Karthik. Exploring unknown parts of the world required enormous capital and carried tremendous risk, too much for any single merchant. The solution? Divide ownership into shares. Let hundreds or thousands of people own a small piece, sharing both risk and reward. This wasn't just a financial innovation, it was a social revolution. Suddenly, ordinary citizens could own pieces of global enterprises. The book's descriptions of early market bubbles and crashes gave Professor Karthik a new perspective on modern financial cycles. The tulip mania of 1637, The South Sea Bubble of 1720. The book shows that irrational exuberance is nothing new. So there's nothing new about market crashes. The technologies change for sure, but human psychology remains remarkably consistent. But what fascinated Karthik most was Ferguson's insight into how stock markets accelerated human progress. Without joint stock companies, how would we have financed railroads, electricity, the internet? So the stock market isn't just about making money. The author argues it's one of civilization's fundamental engines, a mechanism for pooling resources to fund innovation. The stock market creates what economists call efficient capital allocation, that is directing resources toward promising ventures. But what about crashes and corruption? That is the paradox Ferguson highlights in his book. Markets are both remarkably efficient and drastically risky. As profound as these insights were, Karthik realized Ferguson's next revelation would be even more relevant to modern life: the transformation of insurance and risk management. Insurance, futures, options, the mathematics of risk. This is where ancient finance meets modern complexity. As Professor Karthik reached the final chapters of The Ascent of Money, he encountered Ferguson's most relevant insights for our modern world: the mathematics of risk and the globalization of finance. From gold coins to digital wallets in just a few centuries. Today, we are going to explore Ferguson's final and greatest revelation: how humanity learned to quantify, package, and trade risk itself. Insurance began with merchants in early Babylonia, but the book shows how it evolved into something far more sophisticated. Is insurance really that revolutionary, sir? Absolutely. Think about it. Before insurance, one storm, one fire, or even one single accident could destroy everything you built. By pooling risk across thousands of people, we transformed uncertainty from an enemy into a manageable cost. Ferguson's explanation of how mathematics transformed risk management fascinated Karthik. From life expectancy to natural disasters, everything reduced to probabilities and premiums. Then came the real revolution: financial derivatives, futures, options, and swaps. Instruments that let us slice, dice, and trade risk in entirely new ways. But sir, aren't derivatives what caused the 2008 crash? And that is the book's most powerful warning. Our financial innovations have outpaced our understanding of them. As Karthik integrated all of Ferguson's insights, he began to see the full network of financial history and its implications for our future. What Ferguson ultimately shows us is that finance isn't just about money. It's the story of civilization itself. The story involves ancient coins changing hands, medieval banking ledgers, stock certificates being traded, and even the modern electronic markets and cryptocurrency transactions. From Babylonian clay tablets to digital blockchains, financial innovation has consistently transformed how humans organize society. Professor, do you think our financial regulations are adequate? Ferguson's greatest lesson is that finance is both humanity's servant and master. When we forget its power, we bring about disaster. Ferguson's work had transformed not just Karthik's understanding, but his purpose. Understanding money isn't just for bankers and economists, it's essential knowledge for every citizen. Sir, after hearing your lectures, I'm seeing money differently. And that is exactly what the author intended, to help us see that money isn't just currency, but a language that writes human history. And that is how one book changed not just Professor Karthik's understanding of finance, but how he saw the entire history of human civilization. If you found Professor Karthik's journey through financial history fascinating, don't forget to like this video and subscribe to our channel. Hit the bell icon to stay notified about our upcoming videos, exploring more groundbreaking books. Have you read The Ascent of Money? How has it changed your perspective on finance and history? Share your thoughts in the comments below. Want to explore more books that change how we see the world? Let us know which title you would like us to cover next.